What's up everyone, it's Kadi with Money Vesting, and in this video I'm going to be talking a little bit about the markets and the market expectations with the Federal Reserve. We've got inflation this week coming out tomorrow at 8:30 a.m. Eastern, so I will be live to cover that, of course. And next week on March 22nd is when we have the next FOMC meeting where Chairman Jerome Powell and the other Federal Reserve members are going to tell us whether they are raising rates, and they're also going to be accompanying that with the SEP, the Summary of Economic Projections. Now, the market is playing a very, very dangerous game, folks, and I wanted to present that to you because as soon as the FDIC, the Federal Reserve, and the Treasury Department stepped in over the weekend, suggesting that all depositors will be made whole. So in other words, every company, every customer of Silicon Valley Bank, Signature Bank, all the banks that are going down, they're going to be made whole and they don't have to worry, right? So they're kind of restoring that confidence, restoring stability here in the banking system. There's been a huge shift in markets' expectation of what the Federal Reserve is going to do on March 22nd. And before we go into some of the headlines here, I want to go over First Republic Bank, which is absolutely getting destroyed pre-market. It is down a little bit over 60%. So if you come over to the TradingView charts here, so you'll notice that it's down over 62%, trading as low as $30. We've got Signature Bank here down, I think, a little bit over 5%. Not as much as what I thought it would be down, close to 6% here. But a lot of banks are down. So Bank of America is down over 5.4%. JPM is down a little bit over 1.2%. Goldman Sachs here is down 2.6%. Wells Fargo is down a little bit over 3.4%. So the entire XLF, which is your financial services industry sector ETF, it's down over 2.2%. And the game of chicken is between the market and the Fed, because there's been a lot of headlines in the last 12 to 24 hours where the expectations really have flipped over to as much as no hike going into next week. So Goldman Sachs expects no longer the Fed to hike rates in March, cites stress on banking system. So Goldman economist Jan Hatzias says, and I quote on a note on Sunday, that in light of the stress in the banking system, we no longer expect the FOMC to deliver a rate hike at its next meeting on March 22nd. So March 22nd is when the next meeting is from the Federal Reserve, and another economist, Washington's Michael Farr, also says that given the data, the Fed should pause and revisit hikes later. U.S. stock futures bonds rally as markets flirt with the Fed pausing. So we are back to, I feel like, square one. Yes, the change has happened. There's been a breaking point in the banking system. We talked about how inevitably things will break, right? We've been talking about it all of 2022. If you've been part of this channel, we've literally been talking about how when interest rates go higher, eventually something will break. Well, that breaking point is here. However, if you go back to just a few days, last week, you go back less than 7 days, Jerome Powell, in front of the U.S. Congress and the Senate and the Financial Services Committee, pretty much mentioned that interest rates will keep going higher for longer. The pace of interest rates hike are going to continue to be there, and we are expecting higher than what we previously anticipated in our SEP from December. So now I feel like the market's really suggesting that there is a probability for absolutely no hikes, 32% probability for us to literally see a pause in the Fed's policy, monetary policy, and 67% still expecting a 25 basis point hike. So 50 is absolutely out of question according to markets here right now. And when you look at the probability table over the next several months and all of 2023, the market's only anticipating one additional rate hike from the Federal Reserve, getting up to 4.75 to 5%, and then cuts all the way through 2023 and 2024. Literally just expecting cuts starting December all the way through 2024 in July. So in my opinion, markets are playing a very dangerous game. We've been through this. We've been down this road before when the markets continue to price in rate cuts or pivots. And guess what happens when the markets get disappointed? Guess what happens when the Federal Reserve does not give us the green light and yet the markets continue to anticipate, predict, and price certain information in? We drop, we roll over, and right now we're pre-market, we're starting to roll over already. QQQs are still green after the big gap up. However, we are pulling back. SPY is also pretty much flat after the very, very strong green gap up here. Futures were higher. We saw a pretty big gap up here, but of course, we're starting to roll right back down. And I mentioned in our Discord that volatility surprisingly up 10.6%. So there is definitely another spike here on the way as we're seeing the VIX up over 10.8%, getting up to 27 levels. And I wouldn't be surprised if this week we end up in the 30s for volatility as well, because we've also got the quadruple witching on Friday. We've got inflation prints, we've got consumer sentiment, retail sales, and earnings. A lot of things are coming out along with the next week Federal Reserve's FOMC meeting as well. So be careful. I am definitely careful. I'm not buying the fact that the Federal Reserve is going to pause. They're not going to raise rates. That's a very dangerous assumption for the markets to make. Because just a few days ago, Jerome Powell was giving that testimony, suggesting that rates are going higher for longer, and they're going to be higher than what they previously anticipated. Yes, SVB, Silicon Valley Bank going down, Signature Bank going down. That's definitely putting stress on the financial system, and that is the economic pain, and that is the breaking point for the economy. But I really don't believe, I could be wrong, but I don't believe that's going to be enough for the Federal Reserve to give up on its fight for bringing inflation down and restoring price stability. Inflation's still high, and that's what Jerome Powell's mentioned. Let me know your thoughts down in the comment section below. Let me know, honestly, let me know in the comment section below if you believe the Federal Reserve is actually going to pause and pretty much do no hikes, or if you believe that we're going to still see 25 or 50 basis point hike. I want to hear from you guys. I want to see where your analysis is. So let me know down in the comment section below. As always, if you enjoyed this video, find it helpful, make sure that you drop a like, and be careful out there because there's definitely a lot of volatility, and definitely be careful of bank stocks right now because they're extremely volatile. And to our expectations here, what we're really seeing is the 10-year yields roll over even more. They're down another 3.4% at the moment. They're down under 3.6%. I pretty much mentioned as this being a great opportunity. Over the weekend, I did several videos talking about how TLT, TMF might be an opportunity there over the weekend, of course, as liquidity kind of shifts away from equities and away from even banks and goes over to US Treasuries. TLT is up 7.72% and TMF is up a little bit over 1.8, almost 2% here pre-market. So again, if you want to get access to all the Discord alerts and buy and sell alerts, options alerts, and all the trade ideas, the link's going to be down below for our Discord. Let me know in the comment section below. What do you think about the Federal Reserve? Are they going to be raising rates or are they going to be pausing? So always happy investing. I'll see you all in the next video.